Hi, fellow traders, what's happening? I hope you guys had a great weekend and you're still having a great weekend. I know I did, had a full weekend with the family, and that's what's important to me. Like I told you guys before, and I said it many times, you don't build your family around your trading, you build trading around your family. Family must come first. You're going to need that support, and it's gonna you'll have less stress, and it just makes things better all the way around, and you have a lot better chance of being successful at this. Because if you guys haven't realized it by now, yeah, trading is easy, seeing the setups, all that's really easy, but trading is hard, and you're gonna need all the support you can get from day one. You're going to need all that support. All right, so I want to answer this question I get a lot, and it's, how do I improve my trading focus? How do I learn, what do I need to do to help me focus more on my day? All right, and the first thing is you want to fully establish your trading strategy. And when I mean fully established, I'm talking about how you scan for the stocks, how you're going to vet it, the entry and the exit, triggers, everything from A to Z. All right, and you have to be fully engulfed in it, so that if you go through a losing period, you're not going to sit there and start trying to change stuff and fumble around so that you continue to extend it. So you want to have everything laid out so you can just focus on the elements in your trading strategy. And it's not ironic that this is a big part of building your day trading business plan, is laying out the strategy and establishing all of this up front. Because without this, it's going to be hard for you to be successful. And like, let's just take the opening range strategy for this purpose. There are two types of entries that I teach. The more conservative entry, and then there's a more aggressive entry. And you're not going to understand how to use the two, or when to use the two, if you don't have all the other elements in place. If you haven't learned how to read price action, and there's a lot of things that goes into establishing your strategy, so that okay, if the price action dictates this, I'm going to be more aggressive. The price action dictates that, I'm going to be more conservative. And I know you hear me talk about that every day, because I'm telling you, this is going to be the more conservative entry, this is going to be the more aggressive entry. And so all of those things have to be established. So make sure you fully establish your trading strategy A to Z, and then it'll be so easy for you to focus on the things and on execution. And we all know execution is where the rubber meets the road. You want to build smaller, more focused watch lists. It's so easy to build a watch list, and then if it's not doing what you want it to do, start chasing other people's watches. Or, if you got days like we've had the last couple of days where the scanner is just, I can't even see the whole scanner on one screen. It's just that many. When normally, the most I've seen on that scanner is like 10 stocks. And here I'm getting 50. The 75 stocks on that one scanner. So you have to have a way where you can build a smaller, more focused watch list. I'm only watching 4 to 5 stocks. That's it. That's all I'm going to watch. Now, you guys that I'm teaching the more advanced strategy to, The more intuitive strategy, the ones that, where we have, 10 to 12 stocks that we watch every day. It's the same 10 to 12 stocks, but not all of them set up. Only maybe 2 to 4 will set up for a trade out of that whole watch list. But even though we're watching just the same 10 to 12 stocks every day, we do narrow it down to make sure which ones have the window that we want to see. Not all of them are going to have the window. There are days where none of them have it, and you just don't trade it. But regardless of where you are with me, we all build small, more focused watch lists so that we are not all over the place. So that's very, very important. And use only your technical indicators. If you learn this strategy, and like I teach the strategies, I teach the indicators that I use. If you are using different indicators, if you're adding stuff on because somebody else said this works and all that, and you're not adequately back testing it to see how it affects what you do, you're setting yourself up for failure. So only use the technical indicators that you know work with the strategy that you're trading, and go from there. Now, if you do want to add, then you spend some time back testing. That's what market replay simulators are for, where you can go back and replay months and see how this indicator works. Is it something that's viable? Will it give you better results? And the only way to do that is to back test it over time. So to keep focused, all you want to do is use only your technical indicators. And we know those are not what you're making trading decisions on. It's helping you build a case. You're not using one indicator and say, hey, that's this telling me to trade this. You use all of this information to help you build it. You want to filter out the noise. No social media, nothing. All of that stuff gone during the trading day. I answer emails. Once the trading day starts, I'm not on social media. I'm not answering emails or anything until lunchtime, when I'm disengaged from the market. So you want to filter all of that stuff out. Guy, I don't even listen to the news until after lunch. And even then, I may not cut it on, because I don't need all of that in my ear. The only time I will cut it on, is when it's really, really slow, or something happens and we want to find out what happened. If we see the market fall off the face of the earth, then we want to know why. So, but other than that, we're filtering out the noise so we can focus on our charts. And the last but not least, and this is a big one, you have to accept the outcome before the trade. Meaning, whether it's a win or a loss, you're going to be good with it either way. Whether something happens and your platform messes up or your internet goes out, whatever the case is, you've got to accept that before you even take the trade. And it's difficult. I get unglued a lot when things don't go my way. But I stop, I refocus, and I accept it. I'm like, look, I know this could happen, but I took the trade anyway, so I accepted the risk. So whatever happens, and we move on. And you'll see in one of the trades from Friday, I was done. I was through. I got pissed off. I took a trade, and it started acting stupid. So I put in a stop and just walked away from it. Just completely walked away from it and shut it down. And a couple hours later, I look on, my stop never triggered. And had I lost a ton of money, I would have had to accept that, because it's not it's not the platform's fault that my order got rejected. It's not that their fault. It's my fault for not making sure that it triggered. It's my fault for shutting everything off and walking away, with attitude. So, it's, you got to accept the outcome no matter what. Take responsibility, and it takes a lot of the stress off of you, and you're able to just focus on executing your trade plan. And that, again, that's what it's all about. All right, so the end of the week did not turn out well for the market. For the first time in a couple of months, we ended the week with a 3-day skid. Now, Friday was kind of almost an inside day. You can see, but we did make a lower low. We never made a lower high, but we kind of finished inside. What's significant here is this 300 level. This is a strong psychological level. We do have some, price action around it previous to the sell-off, but my main focus is the here and now. And this seems to be a really solid psychological level. You can see what happened Thursday and Friday. We were never able to take it out. So I'm going to be watching tonight, 8 o'clock when the market opens. Is it going to open on a gap down below 300, or are we going to hold it? We're going to open above it and kind of build off of it and hold it through the night. I have no idea what it's going to do. I can't even predict it because we are kind of in no man's land here. It could go either way. And it's all dependent upon how the market participants interpret the news going around. And we talked about this in our market analysis session this morning. If you missed it, go back. It's on the swing trade page of the website. The very first thing you come to, I put the recordings up every week. So you could click on that and listen to what I think about the market and how we build our watch list, the swing watch list. All right, so going to be looking at this 300 level at the beginning of next week. All right, so first trade out of the box. Big fake out. Okay, and some people can blame this on the strategy. And man, the strategy doesn't work. It's crap. It's garbage. It's not the strategy. It's the trader. I traded this very aggressive. Okay, I went in with 500 shares. Was really aggressive on this. And because I had 500 shares, it stopped me out. If I was in 300 shares, I wouldn't have been stopped out. This was just an aggressive entry. I didn't adhere to the numbers I needed to in order for my stop. I just went all out. And I was happy for about 2 minutes. And then reality hit. So this is not the strategy's fault. This is the trader's fault because I decided to be a little bit more aggressive. And we're going to get pullbacks on these things. A lot of times it'll pull back and then it rips up. Still didn't get the move I wanted until later on in the day. We had a deep pullback, but this is just how the market was trading. And it didn't dictate. It dictated to me to be aggressive early and then more conservative late. Because the first 15-20 minutes is when we really get the most volatility, but just messed that up and didn't re-engage. So this was kind of a precursor to how my day was going to go. All right, so now we get into BA. Another another bad trade. I get in thinking we're going to break out, but guess what? Another aggressive entry. Another aggressive entry, not waiting for the setup to confirm. And if I was going to be aggressive, I should have gotten in down here on the break, and I probably would have locked in profit. But I'm being more aggressive here in no man's land, which was just a really bad entry. Ended up getting stopped out and just had to walk away for a minute. I had to walk away and clear my head. So now we come back and we're losing the 200. So I'm saying I'm not going to be aggressive anymore. I'm going to be more conservative. We're after 10 o'clock. Let's do what we need to do. So I waited for the confirmation of the loss of the 200. Waited for this candle to close. Next candle to make a new low. It's confirmed. And I take some off. And it filled over too. You can see it filled over a couple of orders here. You can see I had one order, once at the same price. I mean at the same time, 177.17, and then 177.05. I mean, give me a break. But that's what happened. And then we ended up getting stopped out at break even. So I waited to see if we were going to get another attempt down here. Again, if I was aggressive, I would have got in here. Probably would have hit another first profit target and then got stopped out at break even. But I was like, no, I'm going to wait for it to break because it already put in a low. And I need to wait for it to break. Let's be patient. That didn't work. And so, that was that. So here, we're rebounding over all of this. So I'm like, man, this is really strong. So I'll get in, and it looks really good. And then it starts teetering around, and we pull back a little bit. And I'm like, forget this. I put in my stop and shut it down and walked away. And this is where things could have gotten really, really ugly for me. And where, just you can't do that. I gotta be more responsible than just getting mad and just stopping. It's like, okay, it stops me out and I'm done. And so I was very fortunate that it went up. And this was my original profit target that I had in. And it probably did that because I had both orders out. And it probably rejected my stop because I still had this in. I don't know. I mean, I can't explain it because I wasn't watching it. I don't know what the hell happened. But I took profit here. And by the time I saw this, I had to kill it because we were coming back. I would have it should have been out at break even, right in through here. But I guess it was unfortunate because if I had not cut the thing back on, I probably would have made more money. But it was just one of those things. So I was really, really fortunate. And again, if I had lost, I would have had to accept it. It's not that the platform rejected my order. And yeah, the last couple of days, this platform has been really funny. It's done some funny stuff that it's never done before. But, I accept the risk. And so I want to move on. And so here we bought, going into the close, I was looking for a run up. And yes, I was just looking to get green on the day. I made a mistake. Well, no, it wasn't a mistake because I didn't realize I was actually in the trade. But in through here, I taken a look at my P&L. I knew where I was for the day, and all of that. And because I knew the number, because it was burned in my head, it caused me to take these trades. So I got in, got a little piece there, and got stopped out. And then I got back in, and we had a pullback, but it held a 9. And I'm holding it. This is aftermarket. So a couple of you guys were still in chat, trying to wait this out. But we finally got 190. And I really should have just taken it all off there. But I thought we were going to make this run back up toward 191, but we didn't. So that was that. So ended up the day still red, but I was trying, and this is why I say we don't need to look at our P&L until after the market is closed, because it makes you do things that you don't normally do. And I was trying, I knew I was down $300, and I was trying to make it back, but ended up being down $89.98, and gave me 2 red days for the week, but still ended up $15.88.98. Strong Monday, decent Tuesday, decent Thursday, and these days could have been better with better trading. If things had fallen my way more so, but I'll take it. Not a bad week at all. It puts us at 41.38.89 for the month. And I'm not changing anything. I'm not doing anything differently. And everything's working out. Now, I will tell you this. As part of the roadmap to success, when I teach you the strategies, when we go through the strategies, I am going to share with you a different risk management process. It's one that I did use for a little while in the beginning. And as I thought about this, and it's something that slipped my mind last year when I did this, but it's a different risk strategy that I used to really keep my losses small. And it didn't eliminate, or I didn't shortchange and get out of trades before they worked, and none of that stuff. But it worked pretty good. And, I used it until I started getting more aggressive. But I think it's the missing link for some of you guys. It may help you, because I know it really helped me. But we'll be going over that in the roadmap series. So equity curve going in the right direction. We are headed in the right direction. But it won't be long before we end up like this again, and it's just like the market. Things just aren't going to keep going up. It's just that the market turned around for us. It came back to us. And once it goes away again, we may flatten out. But we're just going to keep climbing. You be consistent. Do the things you're supposed to do. It's going to keep climbing for you. All right. So that's going to do it for me to wrapped up my week. I'll be ready to go first thing in the morning. You guys that are not members, if you want to check out the community, email me. I've got it worked out. I've negotiated a couple of spots that I could use for like a free trial for a couple of days. So email me, and we'll talk about it, and I'll see if I can get you set up. So you guys have a great weekend, the rest of the weekend, and I will see you tomorrow.